Hi, how's it going everyone? My name is Henk and welcome back to the channel. Now in this video I'll be talking about the Australian wealth management company AMP Limited. Recently they had a massive jump in their share price and they're up by around 20% in one day, and making it the largest jump that they had in a single day in about 17 years. Now with this big boost in their market cap, currently their market cap sits at around 6.12 billion Australian dollars. This is the same AMP wealth management firm that handles the AMP KiwiSavers and AMP Capital investment portfolios, including the popular AMP Capital All Country Global Index Fund that you can find on Invest Now. So I'll be taking a look at why their share price is suddenly up by 20% and whether or not they're a good company to invest in. So who exactly is AMP Limited? They are a wealth management company based in Australia but operate internationally. They offer services such as financial advice, superannuation products such as KiwiSaver, and personal insurance products. They have three main segments, which include a banking segment that provides retail banking services covering residential mortgages, deposit and transactional banking. There is also a wealth management segment under AMP Capital that manages investment across various assets including equity funds, real estate, and multi-asset funds. Their New Zealand wealth management segment provides different KiwiSaver schemes, corporate superannuation, and other retail investment products. The last segment that they have is wealth protection, which offers income protection and other insurance products. The company was founded in 1849 and is currently based in Sydney, Australia. So this is a company that's over 170 years old, and that is very, very old. As a reference, gasoline cars were first patented in 1886, so the company has existed longer than there has been gasoline cars. News came out recently that they have received a takeover bid by US private equity firms Ares Management, and this has immediately sent the share price of AMP up by 20% within a day. Now at the moment these discussions are still at a very early stage and there's no guarantees of a deal, but that does not stop the share price jumping from around $1.35 to $1.75 in recent trading days. However, AMP have had ongoing legal battles over the past couple of years. Key personnel within the AMP Capital segment have been involved in misconduct scandals that caused multiple boardroom shakeups in just under 2 years. AMP was also found out to be charging fees to clients for services that they never received, and then they lied to regulators about what they have actually done. A combination of all these factors caused the company's share price to plummet by more than 2/3 over the past 2 years. Some analysts have said that Ares is looking to take over AMP on the cheap at a time where such business is likely to grow in the near future due to low interest rates and the likelihood of more money being put into assets over the next couple of years. Now, overall, AMP still manages more than $320 billion worth of pension and real estate funds and maintains their position as one of the largest wealth managers in Australia. So what actually happens to the share price of a company when one company is trying to take over another company? For example, if company A is trying to acquire company B, the stock price of the acquiring company, company A, is likely to dip in the short term, while the stock price of the target company, the company B, is likely to rise in the short term. And this occurs because company A usually needs to spend a premium to acquire company B and may go deep into their free flow cash reserves and even go into debt to finalize the purchase. This would in turn cause their share price to drop. In most situations, the target company's short-term share price tends to rise because shareholders would only agree to a deal to sell the company if the purchase share price is higher than their current company value. Now, there's no real incentive for current shareholders of a company to approve of a takeover bid if it means selling the company at a lower share price than their current price. So Ares has proposed a takeover share price of $1.85 per AMP share, which is higher than the current share price of around $1.68 per share. Over the long term, the share price of Company A, the acquiring company, is expected to rise again, provided that they're able to turn Company B, the one that they're targeting, into a profitable sector of their company. Let's take a look at the financials for AMP on Yahoo Finance to see if they are worth investing in. And to put it very lightly, it's not looking particularly good. Here on Yahoo Finance, we can see that AMP Limited has a P/E ratio of 9.42, and this is significantly lower than the New Zealand stock market average of around 21. Now, this might make it seem that it's quite undervalued, but we need to dig a little bit deeper because P/E ratio never tells the full story by itself. Now, if we look at their earnings and revenue, they have not had a consistent increase in revenue over the past few years. And not only that, they had a significant dip in 2018. And what is worse is that their earnings have been in the negatives during the past year. Their return on equity over the past year is a dismal negative 9%, which is incredibly bad. They also have a current ratio of less than 1, which means that they carry more current debt than they have in current assets. They can't even be considered as a reliable dividend stock because they didn't pay out a dividend in 2019 due to the uncertainty from the sale of their AMP life insurance business. However, they did announce a special dividend in October 2020 following the completed sale of the AMP life insurance business. But what's even worse is that analysts are projecting a negative 15% growth rate for the company for the next 5 years. So there are really not a lot of positives for the company, apart from news for a possible takeover. So what effects will a takeover have on the AMP business? Now, one of the representatives from AMP said that the takeover talks are still at a preliminary stage between AMP and Ares management, and there's no certainty that the takeover deal would eventuate. This stock price jump is a possible example of people buying the rumor of a sale of a company without real confirmation of the news. Personally, I would not be investing in AMP because they do not have great financials at the moment. And with a possible takeover bid looming, their future is incredibly uncertain. They are not consistent with their dividend payments, so they can't even really be used as a dividend stock. Now, it is entirely possible that with a takeover, they can shake up their business and cut their losses and start being profitable again, but that still remains to be seen. And that's pretty much it for this one. Let me know what you think about the AMP company in the comments below, and I will see you in the next video.